Good evening, everybody. It's Sunday, about 9 p.m. Pacific time. Not financial advice, just for entertainment, yada yada. I'm looking at a couple of stocks this week for earnings releases. I don't know if I'm going to trade them or not. I just find them kind of interesting. The first one is American Eagle Outfitters. I think a few years ago it was almost dead, but somehow it's come back. Earnings is going to be on the 7th, which would be 4th, 5th, 6th. So earnings come out Thursday morning. So it would be Monday, Tuesday, Wednesday that you could play it. I could play it. And the implied move is 12%. You see here the implied move on the weekly. And this is the daily chart, and it's been had a bit of a tear. I mean, since golly, the middle golly, since last summer, it's doubled. It's a nice steady chart. We're getting, excuse me, into overbought territory right now. And the high was here, right? So it's like 24 and a half. That's the high that goes all the way back to almost 2 years ago. All right, so it's gonna be this huge comeback. And so the next peak is gonna be like here, 26 or so, maybe somewhere in here. Supply zone, demand zones are a bit different, but I'm just using these for now. So almost as high as $30. Uh, and there was a gap here that never got filled. They always say gaps always get filled. And so it made a big drop down here, right? From what was that? Like 30, 32.26, but it never got back in. So it's like a dollar. So 30, if it gets to 30.26, it fills the gap from 2 years ago. Is that how that works? I'm still learning this as I'm going, right? So what's interesting is this, is that over the weekend, it gained almost $1, 86 cents. Now, granted, it might be crap. Wait, hold on a second. Let's take. Okay, so the bid ask is 24.70, 24.90 right now, but it's just weird to hit $25. I just find it interesting that over the weekend, it continued to go up on a weekend for American Eagle. Just seems kind of weird. People are buying shares on a weekend, not Friday, end of day Friday. This is afterward. I mean, it's a 24-hour market. So, I mean, yeah. Like I'm gonna be perfectly honest. I don't like to lose money, so I'm not gonna just go and buy some at the money call that expires in a week and and lose it, even if it's $100. I'm just not interested in losing $100. I've had a couple of decent weeks where I've made some money playing earnings. Now, granted, the whole market is up overall, so it's not like I'm some sort of genius. I mean, a rising tide lifts all boats, most boats, not Google. But anyway, also the bid-ask pricing of this $25 is pretty bad. But 25, buy the 25, sell the 27, 50 cents. Maybe you're in for 50 cents. It's like a 4-to-1 payoff, possibly. That's not so bad. I mean, if I could get 50 cents for a 25 by 27, a $2 potential payoff, that'd be might be worth it. But at the same time, though, I have no desire to hold through earnings because I don't know how it's going to go. Nobody does. I think it's just horse crap that people think that they know. Oh, but here's the thing, though: the implied volatility, the implied move, is 12%. So 12%, is like $3 here. So so 28 is a possibility. 28 is a possibility, and IV right now is 130. I bet it'll climb over the next few days. And increased volatility is your friend if you're holding on to a call. Granted, a short dated call like this, you're going to be up against theta and lose time, lose money on that. But I might just take a shot. Like I don't mind losing $20. I would buy the 30. I might buy two 30s. And so hopefully they'll double in value. I can sell one, break even, and keep the other one to either ride through earnings if I'm feeling risky, or you know, sell it also. But having two call options gives me more flexibility. And I'm just going to let it run up, just like I did when I had the NVIDIA 1100 calls. They were never going to hit. It was never going to hit $1,100. It was just the potential craziness of earnings that made them valuable. And I sold them before earnings. Same thing with American Eagle Outfitters. I'm definitely going to dump all these before earnings because I don't know what's going to happen. But if it makes a run, if it makes a nice little run over the next few days, it'll pay. So anyway, that's just my thought on American Eagle Outfitters. It's not going to hit $30. It's just that I don't mind losing $20. And I have 3 days to let it ride. Whereas a Target, which is something else I'm looking at, I only have a day to let it ride, and Target's kind of pricey. It's getting kind of late to do a complete like target analysis, so to say. But in looking at the option chain, I mean, I could buy 160, maybe sell the 165, be there for $1.50, have a 3-to-1 payoff potential, which kind of is not a bad range. Because right now, target's at 156. Could it get in there to the 160? Maybe. I don't know. It would have to have a big day tomorrow. Uh, I could buy closer into the money. I could buy the 155 or 590. Do the 157.50 for force to be there for $120. Have like a 2-to-1 payoff, which isn't the best ratio. I'm probably gonna skip target only because it's just the only thing I might do if I want to try this at all is just taking a flyer. I'd buy the 180, right? Because even on Friday when it only moved up a bit, it still gained value. It gained 80% in value. So if I bought this in the morning and it just ran, I would just sell it before the end of the day. I'd probably put a stop loss in for like $10. So if I get in tomorrow morning for $40 or so or something like that, and I lost $10, I would just get out and just call it a day. Just screw it. Accept that. But it might have one of those days like some stocks like AMD did the other day, where it just kind of went up gradually all day long. It made people a bunch of money, and so that might be worth it. All right, Target has an expected move about 8%. So 8% on 150, let's say, is like $12. So it's like 167. So if I did the vertical spread, that would fall in the money. But once again, I don't want to hold this thing through earnings. It's never, I don't, it doesn't usually work out for me holding through earnings, is all I'm saying. It's like a 50-50 chance, basically. So the other thing is, though, is that Walmart, when it reported on February 20th, I believe, it had a big spike that day. It hit earnings, it did well. They're kind of in the same industry. So, there's a chance. But look at Target's chart. I mean, I think this is the day when people thought the Fed was going to stop raising rates, just rocketed. But look at it's just been on just a nice. Whoever bought did well. It wasn't me, and it's almost getting to overbought, and it's got possibility because a couple of years ago, I mean, it got all the way up to like 255. I mean, it's been up there before, so it's possible it could have a big jump. It's just that I think I don't want to risk the capital for a little fun. So if I'm leaning, I would probably lean toward playing American Eagle Outfitters only because I have 3 days to play with it. it might cost me $20 to take a shot, and it's kind of worth it for me. So anyway, that's just kind of my thinking though, is that Target's got a shot. I just don't know how much money you want to risk to get in there. I just personally don't want to risk putting that kind of money in there because I just hate losing money. But the 180 is a possibility, right? I mean, when Walmart had its big day, right? The open at 59.49, got high 60.48, but it had been rallying all week. It only it only kind of moved like a point, which is like less than 2% for Walmart, so it wasn't that huge. But it's retail though. You can't really expect giant moves like with tech. So anyway, I don't know. Target, I'll watch Target for fun, but I just don't know if I'm going to trade it. Anyway, I think I've said that enough times. This video is getting very long. Not financial advice, just for entertainment. It's just me thinking about what I might want to try doing. Um, so that's about it. Uh, Micron's coming up on the 20th. That might be kind of interesting. And this isn't my idea, but someone was talking about XOP uh, exploration. It's been kind of in this. It has kind of been in this channel. It's gone above this channel, but starting since November, it's kind of been up against 142 or so. It broke above on Friday. It's dropped down, but it's kind of been in this range. There's a possibility that it might be ready to go to take off. Uh, and the thing is though is for XOP, because it's not really like some sort of earnings play. This is an ETF. Um, I'd want to get longer dated calls, maybe even longer than April, but I'm cheap. Uh, Maybe the 160. You know, buy the 160, sell the 170, or I might just buy the 170 because look, it made like 25% on Friday. On Friday, it opened at 141.68, got to 143.12. Friday's a big day, but it closed at 142.28. So it went up 60 cents, and the underlying option went up 25%. Um, it isn't quite overbought yet, but it's kind of getting there. And it looks like we have some crossing here. What is that, the 20? The 20's crossed the 200. The 20's crossed, I mean, the 20's crossed, it's crossed all of them. I mean, I was called the golden triangle or golden, is that called the golden triangle, I think? The golden cross, that's what called the golden triangle, the golden cross. But the 20 has ran through all of it. So it's on upward momentum. So this actually might not be a bad trade. I'll think about it some more, but I might get into some cheap 170s. Anyway, none of this is financial advice, just me thinking about stuff, just for entertainment. Please don't be responsible. The few subscribers that I have, I'm very grateful. Just you being subscribers. Never thought anybody would actually subscribe. Just be careful. All right. Good luck to you all.